let's look forward into the world of technology right now with an expert. We have Simon Leopold of Morgan Keegan. Want to find out a little bit more about the fortunes of the technology industry, specifically, Simon Leopold, when it comes to the world of networking. Cisco, the shares today hit a new 52-week low. I was under the impression that this was now a value stock because of the report from the last quarter at least had so many investors running for the hills. What's up with the industry? And then let's talk about Cisco.
Yeah, I really find it hard that Cisco is now a contrarian call. I like this stock, but it is very much out of favor at the moment. They've had a couple of quarters where they've disappointed investors for several different reasons. To some degree, this is Cisco specific in that they've had some gross margin erosion, they've had some mix shift, and some of their customer segments have weakened up. Cable TV, non-federal government, and that shouldn't be a surprise, of course.
Let's push into some of those non-networking areas that Cisco's moved into. Their purchase of Scientific Atlanta. Why did they do that, and has it paid off?
Well, it's kind of interesting. When they first did it several years ago, it seemed like a sort of bizarre idea. And then one of the big trends that's happened just over the past several years has been about video. Think about what's going on in terms of video as a network driver. It consumes enormous amounts of traffic. It's driving growth in mobile, enterprise, residential. And so having video as a key element of their portfolio makes a lot of sense. The problem they're experiencing is the portion of that business, the set-top box that sits in your house, connects to your TV. That part of the market is very mature, low margin, and is fairly weak at this point. So we think that there's a bit of a lull as there's an upgrade cycle that's likely to merge, as more cable TV companies will invest, have more flexible video, time-shifting video. So we do think that there's a cycle of improvement, but for the time being, that's a weak segment.
What about the various customer segments of Cisco, of Juniper? You mentioned, for example, the government sector, talked about the cable operators. What about the bread and butter? What about the heart of the networking business, whether these are the carriers, the AT&T, Verizon, or indeed, if you take a look at the big enterprise customers, the big corporations? How are those two areas doing?
Those two parts of the market are actually pretty good, and in this case Juniper is benefiting because it is more levered to the service provider market, which is very resilient, and so for the enterprise part of spending, we see that as a double-digit grower this year.
All right, well, we can just take a look at the Juniper Networks chart here, looking from March 2000 all the way to the present. You think that Juniper is a better bet for investors right now than Cisco?
Well, Juniper's a somewhat richer valuation. So to some degree, it's baked into this stock. So we think that Cisco offers more upside opportunity, greater appreciation potential, not a short-term trade in our view, but in terms of where you can make more money, that incremental investment is probably better off going into Cisco. The other point, which I think is important to highlight, is Cisco will introduce a dividend this spring. They haven't set the dividend level at this point, but from a supply and demand perspective for the stock, there'll be a group of investors, institutional funds that need income, need dividends, can now buy Cisco stock where they couldn't buy it before. We think that will also be a catalyst for Cisco shares.
Is there something that John Chambers at Cisco ought to be doing that he's not?
That's a great question. I think there are a number of things that we've talked about that are under consideration. One would be some restructuring. And this is the big question of, should Cisco be in the consumer products business, whether it's things like their flip camera, as an example, which really don't seem like core initiatives. They don't need to do it, and they're hurting some of the gross margins. So that's one of the questions. Another question that I think maybe John Chambers should consider is offering a higher dividend. They've talked about a 1% to 2% yield. I'd like to see them pay more than that.
Something competitive to what Intel is paying, perhaps.
Perhaps.
And what about Alcatel-Lucent? Give you about 10 seconds there. This is a turnaround story that's been in the making for a long time.
Sure. Well, I've liked Alcatel-Lucent for some time, so I've been frustrated that the stock hasn't worked. What to me was the big catalyst was when Verizon announced that they were putting the iPhone on Verizon's 3G network, not its 4G network, but its 3G network. Alcatel-Lucent is the primary provider of that infrastructure. And that, I think, was a key moment where investor sentiment improved. This is a company that is not a growth story, but they're improving their margins, and their customers love them. So there's a giant disconnect between how the customers think about it and how Wall Street's thought about it, and I think that gap is closing.
All right. Well, thank you for sharing that information about the gap and also your positive comments about Cisco, notwithstanding. A little bit less positive, at least on the valuation when it comes to Juniper.
Yes.
Thank you very much. Simon Leopold from Morgan Keegan.
Thanks for having me.